Hi there, very good morning. Welcome back to ET Now. You're watching Market Cafe with me, Kanishka Sarkar and Srishti Sharma. And over the next 1 hour, we'll take you through all the global and domestic cues that you must watch out for and also tell you about the stocks that you need to keep on your radar today. So let's get started with an eye on the globe and see how US markets fared. Well, they did end on a mixed note as the street was positioned ahead of key catalysts that are due on Friday, that is later today. Now, in terms of regular trading, there was a clear rotation away from tech stocks. The tech-heavy Nasdaq composite that slipped about 0.4%, pressured by declines in Nvidia, Palantir and Broadcom. Meanwhile, the Dow Jones Industrial Average gained about 270 points or about 0.6%, while the S&P 500 that finished marginally higher over there. Now, in terms of individual stocks, as I was pointing out, Micron Tech saw declines of about 3.7%, Broadcom down about 3.2%, Palantir 2.7%, AMD 2.5%, and Nvidia as well, more than 2% declines over there. Now, despite this mixed session that we saw, stocks do remain on track for a very positive week as far as the Wall Street is concerned. The S&P 500 that's up about 0.9% for the week, while the Dow and Nasdaq, they've both advanced more than 1%, actually roughly 1.8%, 1.1% respectively. So that's about Wall Street. But now looking ahead, investors are focused on two major developments that are due later today. First is the Supreme Court ruling. Now, it could issue a ruling on the legality of Donald Trump's tariffs, which is a decision that could influence trade policy, corporate restocking plans, and also broader manufacturing cycles. And the second key event is December jobs report. Now, economists are expecting non-farm payrolls to rise by around 73,000, with the unemployment rate edging to about 4.5%. Now, our investors are definitely monitoring developments around Trump's directive to buy $200 billion in mortgage bonds as well, which he says could help push rates and monthly payments lower. So yes, Srishti, all eyes are now going to turn to Friday's data and policy signals for next directional cues in the market. Definitely not many cues, but yes, definitely very important cues that we are watching out for later today.
Indeed, Kanishka, and Monday looks even more interesting, but overnight things turned out to be very much interesting for the commodity basket as well, and specifically crude oil prices, because overnight we have seen almost a 3% surge coming in on the crude oil prices. As of now, Brent crude is trading and hovering around that $62 per barrel mark. But the factor is with respect to supply fears coming in from some of these Middle East nations as well as Russia, because yes, of course, the geopolitical tensions persist. There are reports suggesting that Iran has nationwide internet blackout as protests persist. Is the Middle East unrest that adds to the risk premium to the markets globally, as well as Russia, Iraq, Iran supply fears the oil move, and as of now we are seeing a good jump coming in over there as well. And what's happening in Venezuela, that is something that the markets are keenly watching out for, whether or not they will be able to sell their crude oil prices going ahead. But a bit of a rebound is what we have seen in the safe haven buying, where gold is trading with a little bit of green bias, as well as silver is seeing a surge of almost 1% as we speak right now.
All right, so that's about the crude check. But now let's get you some top global stories that we are tracking this morning. And let's start with this one. Now, the US Senate has advanced war powers resolution with a vote of 52 to 47 that would limit Donald Trump's ability to take further military action in Venezuela without Congress's approval. It's a rare bipartisan pushback in his second term that he has seen. Now, the Trump administration, Trump has responded that U.S. oversight of Venezuela could last years and has also hinted at continued involvement, including control over oil revenue. Meanwhile, Venezuela has started releasing political prisoners as a peace gesture. So yes, tracking all of these developments today.
All right, but the next story is with respect to Trump administration, who is weighing direct cash payments to Greenlanders as a part of efforts to persuade the autonomous Danish territory to secede from Denmark and potentially join the United States, according to reports. Now, discussions have included lump sum payments of $10,000 to $1 lakh per person, and Greenland and Denmark insists that the island is not for sale, with European leaders backing Copenhagen and Nuuk amid the rising geopolitical tensions.
All right, but moving on to the mining space now. Mining giants Rio Tinto and Glencore, they've confirmed early-stage buyout talks that could create the world's largest miner with a combined market value of near $207 billion. That would overtake BHP as well. Now, one option includes an all-share acquisition of Glencore by Rio. Now, markets are split on this decision. Now, Glencore shares, they've actually jumped while Rio's Australian stock, that slid over 6% on valuation concerns.
And American federal agents were involved in a shooting in Portland, sending 2 people to hospital, where police said that the incidents come just after a fatal shooting by the U.S. Immigration and Custom Enforcement agent in Minneapolis. Portland police says that they were not involved and are still gathering details.
All right, moving on, let's get you the latest on India and France ties. Now, External Affairs Minister S. Jankar met with French President Emmanuel Macron in Paris, conveying Prime Minister Modi's warm wishes and reaffirming the India-France strategic partnership. Now, Macron has confirmed that he will visit India next month for the AI Impact Summit. Jaishankar has also addressed France's Ambassadors Conference, highlighting global shifts and the role of partnership in advancing multipolarity and strategic autonomy as well.
Let's now bring you the latest from Iran, which is reeling under protest amid a widening economic crisis. US-based human rights activist news agency says that the protests have spread to 31 provinces and at least 38 people have lost their lives, and it's estimated that over 2,200 people have been arrested.
All right, then moving on. Now, US President Donald Trump has taken some very significant decisions that could shape the entire political situation over there. Now, Republican Senator Lindsey Graham has announced that Trump has given a nod to bipartisan Russia sanctions bill that could penalize Russia's trading partners. Now, if the bill is passed, it would authorize the US to levy as much as 500% tariffs on countries purchasing Russian oil or uranium. The countries that would be most impacted by this would be India, China, and Brazil. Now, in an already strained relationship, this proposed bill is further straining the ties between India and US. And here's what experts are making of these latest developments and about Trump threatening with over 500% tariffs. Right. We also caught up, as I said, with experts. And let's first take a look at what they are making of these developments.
The US has implemented the Monroe Doctrine in this case to stake its claim over, first of all, Venezuela, the overthrow of the regime and taking out Maduro. Then Colombia, and as Mr. Ambassador also said. And now they are taking over Greenland. The Greenland claim is mainly due to the rare earth mineral and the resources in the Arctic ways, to counter China and Russia's expanding Arctic partnership. So they want, like Western Hemisphere for myself. However, Greenland is a part of Denmark, and it's a sovereign territory. So I read a suggestion that probably US could offer a purchase agreement, where so something like what Russia offered Alaska, to US a couple of centuries back. So that kind of an agreement is there. But on the global south point of view, you have to be really circumspect, because the problem is the rules-based order, as we knew since post-World War II, has broken down.
The US already has an overwhelming superiority in terms of its military might on all other countries except for Russia and China. And Russia and China, because they are also nuclear powers, which are don't see eye to eye with the US on all issues, unlike the UK and France, which are also nuclear powers. So that, whether he spends $1.5 trillion or even more is a moot point. It really doesn't make much of a difference. The US already has a very sizable superiority in terms of its strength, military strength. As far as Greenland is concerned, I think this is a very serious issue, apart from what he has done in relation to the Venezuelan president's abduction.
Actually, 500% if he puts that tariff, so it will be the biggest jolt for the Indian exports. And I think government should do something. Otherwise, it is almost 40% of the exports to US. So it will be affected very badly. I don't know whether, see, the government of India has already reduced the quantity of the crude oil. This is a government decision. I can't comment on that. But it will be a biggest jolt to the exports. I think it will be almost standstill to US.
And now time for some important sports updates where the excitement is building as the fourth edition of Tata Women's Premier League 2026 is all set to kick off today. The action begins today at the D.Y. Patil Stadium in Navi Mumbai with a blockbuster opener featuring the defending champions Mumbai Indians, led by Harmanpreet Kaur, taking on Royal Challengers Bangalore, captained by Smriti Mandhana. It's a clash of titans. The two-time winners Mumbai against the 2024 champions RCB, and this season promises high-octane T20 cricket with five powerhouse teams: Mumbai Indians, Royal Challengers Bangalore, Delhi Capitals, Gujarat Giants and UP Warriors, battling it out in a double round-robin format across 22 matches, where the first 11 games will be played in Navi Mumbai before the tournament shifts to Kotambi Stadium in Vadodara for the remaining fixtures, including the eliminator on February 3rd and the grand finale on February 5th.
All right, so stay tuned for that. Lots of updates on the sports front, but with that, also time for a very quick break. Now you're watching Market Cafe with me, Kanishka Sarkar and Srishti Sharma. And it's time now to take a look at how the Asia Pacific markets have opened up. And it's a pretty mixed trend coming in as investors are awaiting China's December inflation reading. Now remember, it's the consumer price for China's inflation for December that's expected to come in at 0.8% on a year-on-year basis. That's according to economists polled by Reuters, and this compares to 0.7% in November. So all eyes on that, and before that, the index is doing pretty well, just up about 0.1%. But yes, holding on to that shade of green, 4,090, where China's Shanghai index is trading. Other than that, Hong Kong's Hang Seng index, that's also trading in the green, managing to hold on to that shade of green yet again, 26,174. So yes, good moves over there. Nikkei, that's actually trading pretty well in trade, 0.5% higher over there, 51,400. That's the level where Nikkei is holding on to. So yes, good moves over there as well. Now let's also talk about ASX 200. That is actually, trading just about 0.2% higher, 8,740. That's the level where the Australian index is trading. And lastly, we have KOSPI as well, which is managing to hold on to that 4,530 level. However, trading about 0.5% lower. So yes, mixed moves, mostly positive over there. Nifty, however, did end pretty low yesterday, close to the day's lowest point, gave up the 25,900 mark. But today we are expecting a mildly positive start after, many soft sessions that we have seen through the week. Friday may be the charm, Srishti, and we might, likely open in the green, and hopefully we'll hold on to the gains as well.
Let's watch out for that, Kanishka. But just yesterday, we have once again seen the shade of red for the Dalal Street, at least, when Nifty did slip below that 26,000 mark for the first time since the beginning of the year, while the sensex was also seen to be declining. But the metal index was actually the worst performing index just yesterday. But how are the other indexes seen to be flaring up? Let me take it across to Snehi for all the details.
Absolute mayhem on the street is how you could sum up the trading day. A 1% cut on Nifty to even end below that 25,900 mark to 26,000 seems like a distant dream for now. You had deep cuts on Sensex, a 1% cut over there as well. Nifty Bank slightly more resilient than the benchmarks, but nonetheless a 0.5% cut on the Nifty Bank too. The broad end of the market saw slightly more elevated cuts. You had the mid cap and the small cap space that have both seen an intraday cut of 2% each on those indexes. So quite a negative day for overall D Street. The only 4 Nifty 50 gainers, Eternal, SBI Life, ICICI Bank and Bajaj Finance. These were the only 4 Nifty gainers that managed to hold on to green. On the flip side, deep cuts coming in on the metal pack, Nifty Metal It was the top sectoral loser. You had Hindalco that was lower by 3.7%. Next up on the Nifty losers, you had Geo Financial, ONGC, Wipro, L&T, Tech Mahindra, Dr. Reddy's, all of them seeing very massive cuts, and this is what kept the index under pressure. The advanced decline ratio was 1:5, with 5 being the ratio for the declines. So the declines overtook any shred of advances that we saw on the street, and that is why the market breadth was so baited as well. If you talk about the sectoral move, Nifty Bank was the least sectoral loser with a 0.5% cut. It only got worse from there. You had the biggest cut on Nifty Metal, 3.5% lower on an intraday basis. Jindal Steel, you had Hindustan Copper, National Aluminium, NMDC, that's Nalco obviously, NMDC, Hindalco, Vedanta, JSW Steel, SAIL and Tata Steel. Despite a good Q3 update, they were all seeing very massive cuts. In fact, you had Jindal Steel that was lower by about 5.7%, so very big cut over there. Following this, you had cuts on Nifty Energy, PSU Banks, IT, Realty, Pharma, Media, Auto and FMCG, and of course the least cut on Nifty Bank. Let's talk about where there was positivity in the market. A very broad, a very narrow range of stocks over here. You have Alkyl Amines that was up 4.5% on the back of the good news that we've seen in Balaji Amines. That stock was more than 10% higher. Very positive news over there. India Cements, Niva Bupa, Trident, Soba, IDFC First Bank, Ipca Labs did very well. On the flip side, massive pressure coming in on BHEL and other cap goods names like Siemens, L&T. All of these stocks were also under immense pressure on the speculation that India has opened up the bidding process for projects to China as well.
All right, thanks Nehi for that entire roundup. But which are the stocks that are going to be on the move today? Meryl is here with that list. Meryl, good morning. Which are the stocks that you're tracking today?
Good morning. Right, so a lot of actions expected today. These are some of the stocks on our radar. First up, IEX on the back of the awaited market coupling case, scheduled for hearing today at 10:30 a.m. The shares closed at 3% lower yesterday, so it's going to be an interesting watch. Next up, Elcon Engineering. The company's reported a mute third quarter result with consolidated PAT down almost 33% year on year. Then we have Astra Micro, with the company's JV having secured an order worth almost 275 crores from the Indian Air Force, and this is for the integration and installation of software in aircraft platforms. Similarly, on the back of order wins, we have RVNL stock also in focus today. The company has bagged an order of 201 crores from the East Coast Railway. Next up, Bharat Electronics has also bagged orders worth 596 crores. This is for drone detection and jamming systems, mobile communication terminals, software solution upgrades, spares and the works. Similarly, Bharat Heavy Electricals also having secured a major domestic order worth approximately 5,400 crores from its JV for a coal gasification and raw syngas cleaning plant in Odisha. So these are some of the stocks in focus from my end. Back to you in the studio.
Right, thank you so much, Meryl, for getting us all those details. But other than that, some of the other counters that you should be watching out for, let's talk about that. And first up is Power Grid. That will be in focus today as the company has been declared to be the successful bidder for interstate transmission system for integrating 3 gigawatt of renewable energy projects in Karnataka. So that's a positive news flow coming in on Power Grid. Let's watch out for this particular counter. Other than that, Sagar Cements will be in focus as the company has said that they have plans to sell 8.14% stake in their arm, that is Andhra Cement. Now, they will sell this stake via OFS to meet the public shareholding norms. And mind you that OFS opens today for non-retail investors and on January 12th for the retail investors. Next stock, that is Fusion Finance, that will be in focus at 800 crores of right issue is actually successfully completed by the company. They have received 99% of the final call money, and that will definitely strengthens the capital adequacy to over 31% is what the company has said. Eureka Forbes, Blue Star, Voltas, these are the counters that will be in focus as the centre has informed the Delhi High Court that it cannot judicially intervene to reclassify air purifiers as medical devices or lower their 18% GST rate. So a bit of a negative news flow for all these companies, but don't think that their air purifiers are actually a major part of their overall financials. And lastly, some of these newly listed counters, be it Nifty Nephrocare and Bansal Wires will be in focus as the lock-in period opens today. For Nephrocare Health Services, it's a 2% equity that comes out of that lock-in period, as well as for Bansal Wire, 20% of the equity comes out of the lock-in period. So let's watch out for these stocks as well.
All right, so lots of stocks that we're tracking this morning, but let's also track some of the cues that we must keep on our radar. And Snehi is back with us to take us through all of them.
Well, yes, a bunch of cues to watch out for the last trading day of the week. Keep a very close eye on the December AMFI and SIP numbers that we are going to be receiving. Watch out for that. And other than that, Friday means it's going to be the day of the weekly Forex reserves numbers, so watch out for that as well. Globally, the biggest watching point from the US is going to be the Supreme Court outcome, if we get one. And they're going to be weighing the legality of Trump's tariff. So that is going to be important, and all eyes are going to be on the Supreme Court verdict. That is if we hear one. And other than that, you'll have unemployment numbers, non-farm payroll numbers from the US, and the University of Michigan consumer sentiment. From Eurozone, retail sales number will be out, and from China, the inflation print in the form of CPI and PPI. Those numbers are going to be important to watch out for as well. Shifting focus back home, we've kick-started the Q3 earnings season, although the Nifty companies will start from Jan 12 with TCS. The one to watch out for is going to be Ireda, Global Spirits, and Tejas Networks to watch out for. In terms of the primary market, the Bharat Coking Coal IPO, which is a subsidiary of Coal India, that IPO is going to be opening for subscription, so watch out for that. The lock-in period is going to be ending for two recently listed companies. That's Nephrocare Health Services, wherein 2% equity comes out of lock-in, and Bansal Wire Industries, 20% equity coming out of share lock-in, so watch out for that as well. Lastly, in terms of some other events, Minneapolis Fed President Neil Kashkari is all set to speak at an event, and ECB Chief Economist Philip Lane is also going to be speaking at another event, so watch out for any cues on the macroeconomies of their respective economies, US and Europe. So watch out for these comments as well, and yes, keep a close eye on all of these cues.
All right, but with this, viewers, it's time now to slip into a very short break.
Welcome back to ET. Now you're watching Market Cafe, and it's time now to get you some more news dates updates that we have trickling in. And at the 43rd Transport Development Council meeting, Union Minister Nitin Gadkari highlighted progress in hit-and-run compensation. Now, earlier, only 17% of claims were filed across 1.85 lakh cases, and now 12,273 claims have been disbursed, marking a 66% improvement in support for victims. Let's listen into his comments.
हिट एंड रन में इसकी भी केसेस बहुत बड़ी बड़ी हुई, आपको पता है। हिट एंड रन में कॉम्पेंसेशन में कई राज्यों में क्लेम ना आने की दिक्कत थी। अभी हमने जो 1.85 लाख हिट एंड रन केसेस है 29 स्टेट और यूनियन टेरिटरीज में, उसमें केवल 17% क्लेम रिसीव हुए थे और टोटल केसेस थी 18,642। तो अभी हमने 12,273 क्लेम्स डिसबर्स किए, 66%। और हमने सबसे आग्रह किया राज्य सरकार को कि इस पॉलिसी के बारे में सारे राज्य ज़्यादा से ज़्यादा जागरूकता फैलाए, क्योंकि ये पैसे उठाए नहीं जाते थे। तो अब हमने इसको अवेयरनेस करने का प्रयास किया है, तो मुझे लगता है इससे क्लेम की प्रोसेस हो जाएंगे, ताकि किसी को सबको मदद मिल जाएगी।
All right, but let's move on to some of the other news flow with respect to the auto space, and let's talk about BMW Group India, as the company did record its highest ever sales in the calendar year 2025. And we spoke with Hardeep Singh Brar, who is the president and CEO of BMW India, to talk more about their strategy 2026, the EV penetration, how is that shaping up, and for BMW Group, what will be the plan on opening up the new outlets. Let's go across and listen in.
We did 18,001 numbers. First time we crossed this number. The last number was 15,753 in 2024. So that makes it 14% growth. Coming to what really made it happen, the first one is, we had 10 new products in 2025. For example, we are sitting next to the X3. This did extremely well. Then we launched the iX1, which is the electric vehicle at 50 lakh rupees, which did amazingly well for us. We were at penetration of 8% on electric vehicles. It has gone up to 21% thanks to iX1. People really love the design of this car. In fact, we got this one as a long wheel base. So if you want to, drive the car yourself on the weekends and you want to sit on the rear seat and let the chauffeur do the driving because the traffic is quite a bit, it's a perfect car for you as a driver or for the back seat. So I think that was the second thing which really worked. In case of BMW, we have consciously made sure that the adoption will improve when the prices are at par. And that has really helped us to maintain this higher level of penetration for EVs. While we have only two big EVs, the i7, in 7 versus i7 is 50-50 ratio. And same as with the X1 and iX1, we are now almost inching close to 50-50 ratio between electric and petrol and diesel. So that's what is working for us. In 2026, we want to expand in smaller towns as well. We are adding 10 more cities to our portfolio to take it from 40 to 50 in 2026 so that we can get closer to these consumers, because sometimes they have apprehension what will happen if something happens to my car. But when you have a service station or workshop closer to you, it takes care of that anxiety. Not that anything happens to the BMW, but still people want that assurance at the back of their mind. I spoke about we are expanding into the smaller markets, adding 10 more cities, but the important thing is the 10 new launches again in 2026 as well, which are going to be big bang launches. 6 are absolutely new products, 4 are major changes in the existing products. And not only that, we have 17 more minor changes in the existing product portfolio. So we are going very high on the product offensive in 2026.
All right, so that's the exclusive coming from the BMW group. But let's move on and tell you what else is happening. Now, the AI boom, that's driving massive investment across the US economy. But is all that capital being put into productive use? In this latest episode of the interview with Aisha Faridi, Raghuram Rajan says that demand is real, but profits are far less certain. Now, he's also warned that investors may face a reality check over time. Let's listen into a few excerpts.
Can the companies make money eventually? And the answer there is, the investments that are huge are going into the hope that the company gets a monopoly in AI. Google gets a monopoly, or OpenAI gets a monopoly, OpenAI and its various partners, or Meta. But in fact, when you look at the progress so far, it's been leapfrogging. Each one leapfrogs the other, but nobody has a permanent sort of better product which is going to capture the whole market. And if that's the case, they're going to be very competitive in trying to get. I mean, I was in India recently, and you see Google ads all over the place. You see ChatGPT starting to advertise. So everybody's trying for that market, which means it will be a competitive market, which means where is the money to sort of pay for all the investments you've made? Maybe over a long period of time, but it's going to take time to do that. And the third is consumers have taken to this stuff. I mean, that's the nature of the Google ads in India, telling consumers use Gemini. But there is the third aspect, which is when our business is going to use it more. And right now, surveys suggest most businesses are exploring, trying to see where they can use it. But when I deal with a chatbot to try and help me with my customer service in the US, it's a frustrating experience. So I don't know that they've got it yet. They will eventually, but that requires bringing the data to bear, updating the AI based on the data, getting the customer experience much better than where it is. That's going to take time. So my sense is a lot of this investment is being made hoping for profits, hoping for quick uptake. And I think we will see some reassessment of that over time. You saw when Larry Ellison's company, Oracle, declared not so great earnings. There's a big turn down because they've made a lot of promises on investment in AI infrastructure, and that's not going to take a lot. That's not going to take a little time to pay off.
Right. But the larger concern is whether all this investment could eventually go to waste. Would that be catastrophic then?
It will not go to waste. The question is, will it make money for the investors? That is something more open to question. Um, all the GPUs will be used eventually. I mean, we may find that there's some new technology which creates more efficient graphic processing units, and the old technology gets superseded. That may be. But typically, these chips get passed down. So, what was used in the US could be utilized elsewhere, and so on. Some of that may happen. But at this point, I don't think there are. It's a question of unused capacity as much as unprofitable capacity.
China's economy may be slowing, but its technological capability remains formidable. Rajan says that China's growth model is broken, yet its innovation engine still rivals the United States. Here's an excerpt of that chat in the latest episode.
The problem with the Chinese administration is really that it is doubling down on the old plan of high tech investments and high tech production. And the problem with that is it's overproducing in every sector it enters. And that is a structural problem in China because you have a whole lot of provinces with their local champions competing, and they're holding up their companies and telling them to produce more, but that's creating a overall China problem in overproduction, which then it looks around the world to sell. And of course, while the US has reacted, other countries will react down the line to Chinese overproduction and put up barriers, including India, but also Europe, the UK, and so on. So I think there is a very real concern that China hasn't got a handle on its economy. Its real estate sector is dead in the water, and probably has further price falls to go. Its manufacturing sector is overproducing and has been overproducing because of structural problems. Local governments find production to be a source of tax revenue and want to encourage their champions to overproduce. And as far as the infrastructure goes, they've pretty much built what infrastructure is needed. More infrastructure is now wasteful rather than beneficial, except in some rare places. So their own model is broken. They don't have a new model, and they're doubling down on the old model. Ideally, they would, encourage more domestic consumption. They would, deal with the real estate sector because houses are the biggest sort of asset many households have, and so long as it's plunging, they don't have an incentive to spend. Unlike the U.S. household, which is spending as if things are great, which may well be given what's going on. So, bottom line, I think China needs to rectify its growth model, while the U.S. can help by saying, okay, we're not going to totally undermine your growth. We're okay if you grow, and that creates lower uncertainty about Chinese growth. Right now, I think it's unclear how this goes. Certainly, China has to fix its growth model sooner rather than later for the world's benefit.
Right. But if we isolate China's deep tech rally or deep seek rally, which has been among the best performers this year, do you think that story is under a cloud then?
No, I think some Chinese companies are jewels. Their Chinese innovation, Chinese work ethic. I mean, all those are incredible, and I think it's showing. I mean, China is not. In many areas, China is making advances. We saw the DeepSeek movement, but it's emblematic of deeper technological progress, including, for example, the belief was in chip making machines like the ones that ASML produces, which are very, very high technology. China would be stymied because it wouldn't be able to buy the latest machines, but they able to engineer the old machines to do better by adding on to them. That's a level of technological sophistication which I think is suggestive that China is way up there. And that's true of many fields. And a lesson India should take from China: focus on your universities, on your technological capabilities, improve the quality of your universities, improve the quality of your graduates, and encourage industry to do more R&D, to do more innovation, because that's where the future lies. And so long as we're sort of sitting back and watching the world go by, we'll fall further and further behind. This is an arms race, and we need to enter it sooner rather than later. But I think that China has good companies, has good engineers, and those are showing up in stock prices. It's also focused much more on the applications of AI, unlike the US, which is focused more on the foundational models right now. But China is showing the way in some areas, and I think that's reflected in valuations. But broadly, they need to get their act together on the economic front.
All right, so stay tuned for that full episode. But now, all eyes are going to be on the budget this February. Now, in the first episode of Budget Yatra Chennai edition, Jude Sanat caught up with R.V. Chari, the managing director at GH Inductions India, who talks about tariff and its impact on the orders and execution for the auto industry, and V.T. Chandrasekhar, the chairman and MD at Emerald Tire Manufacturer, also talks about the challenges of the rubber industry and how it impacts the auto industry thereafter, as they are interrelated market players. Let's take a look.
On ET Now, we're traversing India's top cities and industries, all in the hope to find answers to just one question. What does India Inc. want from Budget 2026? So join me in Chennai as I track how the Trump tariffs have impacted business at auto ancillary industries and whether the component ecosystem is keeping up with India's big EV shift.
Our first stop on our yatra takes us all the way to one of the sector's hubs in Thirumudivakam, located within the Sri Perumbudur area. It's right here that GH Induction India builds components for domestic automobile consumption and exports. In recent times, though, it's that second bit that has seen the most stress.
Perhaps the greatest challenge that plagued India's auto components sector came in the middle of last year when US President Donald Trump imposed the infamous Trump tariffs totaling to 50% on components exported to the US. America's reasoning was that these were penalties on India owing to the country's patronage for Russian oil. On the ground in Chennai, the impact of those tariffs was felt by way of cancelled or delayed orders. After all, American imports of India-made auto components accounted for 30% of the industry's top line. What the tariffs did was throw a spanner in the works of component makers, pushing them to seek out alternate export markets to offset the shock.
There's a challenge not only from the tariff alone. The tariff has impacted us tremendously, but on top of it, the European market going down was also part of the challenge. With the tariff being implemented, we had challenges from Thailand, Indonesia and Vietnam. Also pitching up for the space we lost. And we thought that we will have the impact only on the 50%, but then it also increased much further than that on the total market. So I would guess that some customers of ours are affected, some less, some more. The people who had warehousing there were affected much more than people who were able to export from here, X-Works Chennai. They had lesser impact compared to the ones who had warehouses there.
We've traveled from Chennai to the neighboring town of Gummudipundi to make a pit stop at Emerald Tire's plant in the region. Now, the rubber industry is a critical part of the auto component manufacturing ecosystem, powering exports and rural employment. However, it's also this industry that faces a host of challenges, including raw material shortages, inverted duty structures, and global trade pressures on account of President Donald Trump's tariffs on exports from India.
The Indian industry is gearing up to meet the international standards. So in many ways, we are peaking in terms of productivity, we are peaking in terms of quality. So all those companies who are coming into India want to look at local sources, and that is what is fueling the growth. Other than that, China plus one has been an advantage. Probably, that if the tariffs are taken care of, the industry will further grow.
So if you were to have a wish list in your hand and jot down the kind of duty structure that would be most preferable to the industry itself, what would that look like?
Raw material should be allowed to be imported, at least to the extent of shortage of natural rubber. We should be allowed to import at zero duty. Other raw materials also, there is a lot of ADD being added on to some of the critical chemicals which are not available, which are not fully manufactured in India. So if those chemicals are allowed to be imported at zero duties, then that helps. The other side of it is, if there are if duties are imposed on imported products, at least there is a safeguard for the industry. So this is something which is very critical. Either way, either you allow raw materials to be imported at a lesser duty, or you allow finished goods to be imported at certain duty levels, which gives a competitive edge for the industry. So that is something which we are very hopeful that the government will address at this point.
Absolutely.
Well, yes, now moving on to an exclusive then, where the centre is likely to receive at least 10% higher dividend from PSUs compared to the last fiscal year. My colleague Prakash filed a report. Take a look.
Well, the government is likely to receive higher dividend from PSUs in FY26 compared to last fiscal year. Government sources suggest that they're expecting at least 10% higher dividend from PSUs than financial year 2025. Along with that, sources indicate that the government's share in PSU dividends may cross rupees 80,000 crore in FY26, which was rupees 74,000 crore in financial year 2025. Along with that, dividend collection has reached approximately rupees 50,000 crore so far in current fiscal year, which is likely to grow further. In addition to that, the overall dividend distribution by PSU may also be higher than the last fiscal year, which was rupees 1.2 lakh crore in FY25. The government sources have reiterated that they are insisting on effective implementation of fair dividend distribution policy, where PSUs have proved themselves to be a role model in terms of fair dividend distribution. Along with that, sources are also indicating that any shortfall in disinvestment receipts is expected to be offset by higher dividend collections.
All right, so from PSUs, now let's shift focus to the primary markets. And this year's first IPO is all set to open today with Bharat Coking Coal's BCCL 1,071 crore rupees offer. Now, the Coal India subsidiary and largest coking coal producer in India, it has announced a price band for its offer earlier this week. It's at anywhere between 21 to 23 rupees per share. We also spoke to the company's management about their outlook going forward. Let's take a look at what they had to say.
Year to year, we will improve at least by 2 million tonne, and around 29-30, our production target will be 54 million tonne.
Our capex plan is close to 1,000 crore rupees per year, and the main outlay for capex is for building up our washeries and getting land for the mines.
In the first half, as we slipped the production target, the reduction in the e-auction premium has led to the reduction in the EBITDA in comparison to the previous year. But if we will go to the whole year because we had already ready with the OB exposure. More coal will be extracted. It will be covered up. And the coming year, as we are going for the more wash coal sale, EBITDA is projected as per on increased coal production of the wash coal. That will give a volume to the EBITDA.
All right, but let's move on. And Q3 earnings season is right around the corner, and Citi has come out with its expectations. Now, the brokerage firm sees 11% EBITDA growth for Nifty companies and also shares what will drive this particular growth. Let me take it across to Rabinda, who joins in with more details.
Well, yes, Citi India has come out with a very interesting report, and then where they expect approximately 11% year-on-year growth, EBITDA growth in the Q3 of FY26 across the Nifty and Citi universe, which is supported by a recovery in consumption, acceleration in loan growth, IRNR depreciation, etc. And they say that the management commentary on sustainability of improved consumption trend and evidence of stable asset quality will be key monitorable for the companies. And while India's valuation are not cheap in the absolute terms, but they remain reasonable on a relative basis as compared to long-term averages. And on the sectoral trends for IT, they expect a Q3 FY26 constant currency services revenue growth of approximately flat on a sequential basis for the top 5 companies. And in pharma sector, Citi expect the domestic sales to remain strong, while US sales trends are likely to be flattish. And on a possible surprises, the positives could include Maruti, which is driven by the high operating leverage and the better mix on a sequential basis. And for HDFC Bank, they expect NIMS margin in the Q3. And for Eternal, where a lower expectation mean re-rating for the earlier guidance will be positive. And on the downside, they say that ABB India faces the risk of the weaker than expected earnings due to growth and realization pressure, while for LTI Mindtree, visibility on double-digit growth for FY26 after the recent outperformance remain critical. And among the key things to watch out for the going forward, that is the US trade deal remain an important sentiment driver despite the limited direct impact, alongside the RBI policy stance, where Citi expect another rate cut in the February 2026 and the upcoming budget. And Citi's maintain overweight on the banks, telecom, auto, healthcare and defense, while underweight on consumer staple and IT services.
All right, thank you, Ravinda, for that update. But with that, we're completely timed out on this edition of Market Cafe. Srishti and I will take your leave, but don't go anywhere. The market is coming up next.